One.
After that choppy price action on Friday, the last thing you want to see is an overnight rally and a fade. Folks, that's what we're starting out with on this Monday morning. We'll talk about it with the cow guy at 8:05. Some ratings moving stocks, spin off Monday. What does that mean? Well, we'll figure it out. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
From up 30 handles to down 8 handles. Not good. 43, 17, 50 is where we're trading at. Maybe blame the buck. That's up 37 and a half cents at 106.19. Bonds down a half a point, 113 and a quarter. Crude still above 90, up 52 cents at 91.31. Who needs gold down 13.20 at 19.52.80? Silver now under 22. I think this was in the 23 handle earlier on Friday. Down 59 cents at 21.96 and catching a sneaky bid. Bitcoin futures, they're up $1,455 at 28,555. Triple D, help me figure out what's going down besides the spider and the S&Ps. Apple up, Microsoft up, and Amazon up. Wow, Amazon's flat. Nvidia, what are you seeing out there?
We're seeing pretty good strength in tech, but the indices are not carrying. I'm actually very surprised looking at the index to see us down here because when I come in, I would say 2/3 of stocks are still green, but I think a lot of these are old ticks and they just haven't hit them yet. So, like a lot of times, you're looking at your screen, it's the last trade, and some of these don't have the market. So, a lot of these stocks are indeed going to go red. I've been hitting stocks all morning. So, I mean, I'm not helping the cause. I think there's other traders probably hitting stocks all morning here too. S&P is down 10 points. It does not feel like an S&P down 10-point day, but maybe it's gonna if they keep whacking stocks here.
I just want to go into that real quick. I mean, like, all right? You're right, because Apple was up a buck 42, and I was just going to ask you where Apple was offered, and it just ticked down to only
It's
up
almost
nine
flat.
cents. Yeah, almost flat on that.
QQQ is flat, so we're holding on some of it. But yeah, Joel, it's a good observation. I mean, it doesn't look that pretty here this morning.
And let's bring in Money Mitch. I know we got an early guest today at 8:05. That will be the cow guy. But Mitch, how was your weekend?
Not bad at all. Football, not the best, but forget football. What happened with the Senate, right? In a last minute move, the Senate has passed a continuing resolution to keep the government open for an extended period of 45 days, avoiding the shutdown. President Joe Biden signed the bill into law just hours before the midnight deadline on Saturday. However, it is important to note that this extension only keeps the government functioning until November 17th.
Wow. Um, Lots to take in here. So obviously just got an extension. It wasn't a deal. It was just an extension. But the market applauded this big time last
Oh,
night,
I
and they were
know.
ripping the futures. Bitcoin was ripping higher, and they just couldn't stop the S&P futures. We were up 12. We opened up like 12 or 13, Joel. Then, like to your point, we were up as much as 30 points last night. It's like, yeah, the bulls were chanting around. They were saying the bears are dead on this. They didn't expect this deal over the weekend, and they're toast. I saw it all over Twitter. The bulls were just chanting around, celebrating, just like the Lions were winning the Super Bowl. It was crazy, the celebration on Twitter last night. So I'm like, okay, well, I'm obviously in the bear camp. I'm like, I think it fades. I was going to bed here, wake up, and I'm like, oh, the rally has started to fade. And we were up about 7 or 8 when I woke up. Well, now we've fallen another 17 points, and I'm looking at this and saying, holy cow, is this not the worst case scenario for the Bulls? They get the news they need, they get the rally they need, and then they give it all back before the trading day even starts?
I
This
know, right?
market? Bears remain in firm control. How do you know? Well, they don't hold any rallies.
I know. I was looking at the same thing and looking at the setups, and I'm like, 30 handles. They're gonna pop this thing 15 handles just on the opening, but that's the market for you, right? I mean, you got to be able to. The thing I want to point out before we bring in the cow guy is look when we came in. I do have my chart up, but it's like the equity traders came in and they just said, because it was right at 4 a.m. Perhaps it would have been worth to get up at 4 a.m. today. Yeah, they just came in. They're like, huh? What do you mean? I'm sitting on this from Friday. I bought the dip and you're doing this to me? Boom, I'm out. So I think, yeah, important turn there.
Yeah, that's what we are. We continue to remain in the Steve Miller market. Take the money and run. And if you're not taking the money and running on these little pops, the market will take it from you. We're back in full bear mode. I've been talking about the bear market here for the better part of a week and a half. People were fighting me that we were in a bear market 2 weeks ago. They were fighting tooth and nail. They're like, we're not off. Look at the stats. I don't see us down 20% from the highs. And I'm trying to tell you, the stats are stupid. You can feel when we're in a bear market. When you're trading as much as I do, and I mean, this is why, you guys listen to the show, because I'm down and dirty. I'm in the trenches. I'm feeling the tape. It's my edge. And my edge is that I'm in there all the time. I can feel how hard it is to sell stocks. It's hard to sell stocks. That means the bears are in control. So, I mean, you can just feel it. Even in the after-hours session, it's like this stuff leaks back. I mean, they ramp them overnight, and then, like you say, Joel, the equity traders open up, and they hammer the bids once again here. You've got people very nervous going into this earnings season for good reason, because we've had some warnings towards the end of last earnings season. We know Nucor, we know the airlines. There was a number of other companies too that had warned. You have a diversified list of companies making new 52-week lows. You have a lot of issues here, and then you're going into an earnings season that's priced for perfection. How do we know? Well, Workday. We'll lower margins just like 3-4% here. We'll hammer the stock 10%. What do you mean you can't lower margins? You're trading with a P of 40. So, I mean, that's right where it comes back to. It's valuation, a high valuation on a lot of stocks meet expectations that are simply too high. And that's
all right,
what we do, folks.
All right, guys. Well, hold on there, Dennis. Let's move on over to the cow guy.
All right, we are joined by Scott Schlady, market specialist, the cow guy at RFD TV. Scott, I don't have a feeling you're not going to be talking us off the ledge. How you doing today?
I'm doing well, great for a Monday morning. And you're right, I'm not going to talk you off the ledge. I've been, if you're not living life on the ledge, move over because you're taking up too much room. That's what I would say. I think a lot of the comments that I've been listening to while I've been in the waiting room are exactly correct. And I do a lot of media, and a lot of stuff pops up on my timelines with, say, Facebook and the likes. And, for the last few, months, every time something pops up where I've been talking on somebody else's show or doing something on mine, and they've got the banner at the bottom, the Chiron saying, what the markets are doing at that moment in time. A lot of them are unchanged over the last 2 years, or maybe actually a little higher. It's funny how, the market has been whistling by the graveyard. And I think that there's something else at play here, which a lot of folks really aren't taking into consideration. And the fact of the matter is this: China, Russia, North Korea, and a lot of our other smaller enemies are getting together against us right now. And I think that there's got to be a little bit more nervousness in the market because of that. We are just ignoring it blindly, like we are our problems on the southern border, and it's going to have an economic consequence. I mean, I don't know about you, and I don't want to make this political here, but I'll just say one thing. I didn't vote to have my tax dollars go to house, feed, and clothe 6 million illegal immigrants. It's going to have a drag on the economy. Yesterday, they're calling it Sunday, Bloody Sunday, because we have to turn back on the student loans that people should have been paying all the time anyway. And then we're faced with the fact that we've got these rates that don't look to be going down, and arguably could be going higher. We had the PCE on Friday that doesn't look good. If you ask me, I mean, I love how people say inflation's cooling or going down. No, it's just going up at a slower pace. You're paying more than you did this time last year. And then we've got the specter of Christmas coming around the corner. And a lot of folks still like to spend a lot of money on Halloween. So I think budgets are tight. All the loan details tell you the fact that we've seen foreclosures are starting to spike. The car loans delinquencies are spiking. Delinquencies and or denials of new credit cards are spiking. I mean, I just want somebody to show me one piece of good news so I can sleep well, because I can't find it.
We're going to find good news for you here, but I'm with you. And I think the writing is on the wall here. But bring it back to, product inflation and talking about products still going higher. You know what the biggest issue for this market is? And I think I'm the only one saying it. Like, it's labor inflation.
Yes.
Because you are seeing this across the board here now. UAL pilots, Friday, get 40% raise. UPS, 40% raise. GM and Ford and Chrysler workers want a 40% raise. They don't want a 4% raise. They want a 40% raise. What is this going to do to margins? If we're going to start jacking up everybody's wage by 40% over the course of the next couple of years, does that not show up in product inflation as well? Because these companies are not going to be able to eat this. They're going to have to pass a lot of these costs on to consumers. Those cars that are $75,000 you're looking at, like a pickup coming from Ford or from Ford, is going to go up in price more. Who's going to be able to afford these trucks? So they can complain like, oh, well, I'm working and I can't afford to buy a new truck because you're not giving me a fair wage. Well, nobody can afford to buy a new truck. And as you know, now you're going to put 40% rates. They're going to be $100,000 pickups here.
If they're not already. I mean, you're exactly right. It's the wage price spiral. We talked about that when we were all in economics way back when. But I'll tell you, those wage pressures will come through in higher prices for the vehicles. We're ultimately going to be the ones that have to pay the price for that. You're exactly right. But I'll tell you, just to give everybody a 60 seconds of history, there is some silver lining at the end of that issue, because it was 1973. Now I have a British passport. I've spent 16 years living in London, trading the markets in Europe. So I'm a student of Winston Churchill and the English prime ministers. In 1973, we had an English prime minister named Edward Heath, and he was a conservative. But he lost control of labor, like you're just talking about. And the coal miners went on strike at the same time. The railroad workers went on strike because they felt he was weak and took advantage of it, and basically shut down the country. That's when they instituted a 3-day work week in 1973. Officially, the country was off and closed on Mondays and Fridays, and people only went to work Tuesday, Wednesday, Thursday. Obviously, he got kicked out of office. A Democrat was elected right away, and he was basically shunned from his party. But having moved aside because of the decisions and all those strikes that he let labor get out of control while he was in power, that created a vacuum, which allowed for a certain person by the name of Margaret Thatcher to come in and take over, and all was good for the next 10 years after that. So there could be something good that comes out of this, but I tell you, I feel as though, and I don't want to be too hyperbolic, but I feel as though they're losing control of the economy. They've held a lot of balls in the air, but I think that some of these things are starting to come to fruition. They're dropping a few, and at the same time, they're losing control of labor. And you've got a problem when you don't have control of labor and the economy. And I think that there's only one thing that's going to happen. We're going to have a hard landing, and we're definitely going to have a recession. But I don't think there's any way that we can guide this thing lower because of what you just said with the labor and what we already said about what's been going on in the economy.
Scott, looking at, all the very factual stuff there, but like when I look at like a recession, I look at slowdown in the economy. I look at unemployment, and right now the unemployment rate for the time being is nowhere near flashing any kind of recession or slowdown. Now, there's a lot of things that are going on could change that. Is it possible that we could have the kind of collapse that you're talking about, or retreat in the market while still having low unemployment?
Unemployment will be the last thing it's already falling. Look, we've had something that's mathematically almost impossible have happen. This is almost mathematically impossible. It's to the level of 12 sigmas, right? 99.7% of things that happen in this world happen within 3 sigmas. But we've had each and every labor report this year with payrolls ultimately revised lower every single time. Okay? Now they get revised 2 and 3 times, but the final one is always lower than the first initial release. You know what? That doesn't smell good, if you ask me. Now you take on top of that a collapse in the GDP for the average person spending, personal expenditure. I'm telling you, maybe we have a recession with 4.5% unemployment. Because we've got so many things that went wrong, or at least were reshaped with the pandemic. Number one, baby boomers. Number two, I think it's going to be 5 to 8 years before we get our hands or a handle around all these economic indicators after we've gone through and finally had the pandemic kind of work its way out. I still don't think we're getting good, true signals from the economy because of what's been happening with the pandemic, and we're still trying to have that. Look at the bills of the spending. I mean, $6 trillion. $7 trillion, 6 million people coming over the border. We are still suffering from the pandemic. And I think a lot of that stuff's still coming through in the economic indicators.
So what to do? What to do? Where do you go? Do you hide out in T-bills? Are you finally getting a turn in the bond market? Maybe the bonds will stop going down. Where's the average investor supposed to hide?
Well, I tell you what, for the first time in a long time, and look, I take care of my family's money. That 5.25 on 1 year plus a tax break, it's hard to say no to that. If you look at over time, 5, 6, 7, 8% is what you've been getting from the stock market. Now, in the last few years, it's been crazy. People have gotten way too accustomed to 20, 25% moves in the stock market. But I think that for the time being, if you want to sit there and wait and see what happens, because every single sign is danger, Will Robinson, at least flashing yellow. Some are flashing red. I don't think it's time to shoot for the corner office right now. I think it's time to just be in there picking up nickels in front of the steamroller.
Scott, that's such a great point that you just made, is that people have become accustomed to getting 20% of their money by being in the stock market. When the long-term returns, and newer listeners, please listen to this, the longer-term returns are exactly what Scott said. It's 7-8%. That's what the S&P averages over time. So it's not 20%. And we've had these luxurious years, where everything has just been going up. So maybe we get into a period where this irrational exuberance of the stock market just cools off for a little bit. And maybe we don't get these 20% returns. Maybe we get a couple minus 20s in here, and you're like, oh, that hurt. That stung. That's how the market normalizes itself. Corrective periods here. We haven't had much of a correction here yet. People think stocks have corrected because Cathie Wood is down 75%, but that's a little pocket of the market. A lot of stocks here are still holding up fairly well. The S&P, obviously, you got the big caps holding that up, but the S&P is not down far at all from the highs. When you put it in perspective, Scott, 2020, we're sitting there at 300 on the SPY. We're 426 on the SPY. We're still up in nosebleed territory here in valuations as well. So I'm kind of with you. Caution, man. I don't mind your 5.25% for your family's money right now, because I just see so much dang risk. So what would change your mind? Let's take this to a question. What would change your mind? What would put Scott Shalady and say, okay, that's it, I'm buying stocks? What would happen?
I would have to see common sense come back into our daily activities and a daily lexicon. Right now, I keep going to bed every night thinking it can't get any dumber, and every morning I get up and things got dumber. So I need to see my life get back to common sense. Yeah. I need to see the people that are running my life, our lawmakers, our politicians, not look right into the camera and tell me that the border is closed when it's not closed. I don't know what to say. That's so unnerving to me that the people that are supposed to be in charge of everything can look into the camera and say what they say. That makes me love that 5.25% rate too. I would need to see some sense of normalcy come back into our lawmakers and how our lives are divvied up on a day-to-day basis. Then I would start to think, now maybe you have to do that a little earlier than the rest of the crowd. But boy, oh boy, right now I'm 57 years old. I'm about to be 58. I've been in this business for 36 years. I have never in my life seen a situation where I'm having to make investing decisions with total disregard for common sense.
All right, I'm going to go to an area, of course, that we've been seeing a lot of issues, and that's with kind of the looting and things that we've been seeing in retail, some more troubles I posted up this weekend on my Twitter. I've been seeing more and more. Are they just going to close all these kind of box retailers in the major stores? What's going to happen here, Scott?
Well, Target's closing a lot, which is a shame. And part of it is that this is all organized. It's organized retail crime, organized retail theft. A lot of it has to do with it's also being taken. The cartels on the border are also behind a lot of it, they say, in California as well. I'm just parroting reports that I read. I would say this. Unfortunately, I think that's putting more and more power into the bricks and mortar goodbye story. You're going to have to see more and more of these people going to. I mean, I haven't been in a Walgreens and CVS since before the pandemic. Why? It all comes to my door. All of it's on Amazon and or CVS or Walgreens delivers. So that's going to change. I think that all the big malls out there, folks, are going to turn into condominiums for people that want to walk during the cold weather too. And still, we're going to see a shift. This idea that you're going to go shopping, when I was in London for 16 years, I can't believe I've just said that twice, but they've had the problems there too. But what they did was, and I don't know how this affects retail sales, but you go up to the door and you have to be buzzed in.
That's insane. I can't do that. I don't know about you, Scott, but I'm not going to be trying to be buzzed into the doors and things
I was in
like
China.
that.
I was in China before, like during the COVID, right? I was in China December of 2019. All right. And when you go into their stores, they let 5 in at a time. You get in a little holding pen with it has like velvet ropes around it, and it scans your face to make sure that you're not a bad person and you don't have a record. And they check your social credit score, and then after about 20 seconds, a green light goes on and the gates open, and then you're allowed to carry on with your business and walk into the store.
That's interesting. That's definitely interesting. Now, one area that I think this might expose is all the kind of real estate that could be closing down, and real estate that could, put exposure to these banks and regional banks. What do you think this might lead into a bigger issue here, Scott?
I do. I mean, first of all, you can't afford residential properties with the way that these interest rates are. But at the same time, commercial real estate has got to have a correction. And I don't know what you're going to do with all these big buildings or what you're going to do. I mean, look. I got to go in 1 second, fellas, but I'll tell you, I just had reports from a bunch of people that went back to Chicago. I'm in Nashville for my show now. But think about all those big buildings in the city that don't have anybody running the stores that are in those, mezzanines and ground floors, because there's, 40% occupancy, 30% occupancy in those big buildings. There's a whole section of the economy that's not even open because you can't, those stores are all closed. You can't get anybody to go in them because there's nobody downtown. Mondays and Fridays, apparently in the city of Chicago, it's a ghost town. So, I mean, we have a long way to go, folks. I mean, with the damage that we did to the children, with what we're doing to our economy, with what we're doing to our border. I mean, I need to see common sense come back so then I can go back in both hands.
All right, Scott Shalady, the cow guy. Everyone in the chat saying, "Where's the outfit? I need I need to see."
I'm busy
here.
You can catch me 1 Central, 2 Eastern, RFD TV. There you go.
There you guys have it. I threw up his Twitter. Give him a nice follow. Thank you for coming on here. The cow guy, never holding back. You guys hear him out there. Definitely the chat loving it. So let's keep going. Let's get back to the markets. How we looking, Joel? Oh, mute.
Just before you talk the markets, I just want to sum up, just an observation here. We are in such a divided market here too right now, where people are very bullish or very bearish, and there's nobody in the middle. I mean, there's we're going back to all-time highs. You can't stop it. Look at NVIDIA today. I mean, I'm hearing, the other opposite side of the story from Scott, where we got problems here, and obvious problems. And common sense does tell us we have problems, but this stock market hasn't traded on common sense for a long time. So, I mean, trading on common sense has been a fool's game here for the better part of a number of years, not just a number of months. So, I mean, does this market reconnect with common sense, or does, the party continue here? I think just my observation, we had Ryan Dietrich showing us the stats. Dietrich, the stat man, doesn't care, about any of that stuff. He just looks at the stats and says typically, when we've had, this happen, that this is likely to happen, and that often does happen. So very divided market here. And, maybe that just means more chop. I think when I see that, I just don't see I do feel like the bears, I'm more bearish than bullish here. But at the same time, I feel like we could just continue to chop, and fading everything is working. Where you're buying the dips and selling the rips maybe, but more selling the rips than the dips because the rips don't even hold for a day.
Or a night,
Or a night.
or 24. I mean, I think you talk about the importance of, we like to talk price and we like to shoot charts and whatever double, but really when it comes down to it, it's really the fundamentals. It's the information that you're getting from the companies themselves. And I would say heading into with a lot of these earnings season, we've come up, it's like, this is it. This is the one. This is the one where just everyone is gonna, and then they just kind of eke it out, and we kind of just get by. We just kind of, like, okay, like Apple Beats or this or that, the other thing. It's like, we haven't like got socked in the face, like, boom, like 3, 4 really super bad reports. And
Yeah.
it's just kind of the way it feels right now. It just feels like like the rallies, especially, there's nothing where I think people are looking like, oh, well, what are these guys talking about? They're so bearish. They're only down 8.5 handles. Folks, we were 40 handles higher. I mean, that is such a precipitous decline in the market. I mean, it just shows you the sentiment and the importance of following the markets like you do, or like we do for you on a 24-hour basis. So what else is there to say? We're coming up. Someone mentioned we're leaking. We'll see. We're coming up on Friday's low at 43.11. That's a big number. And then I think the other big number on the downside is last week's low. And we're still 30, 40 handles off that. But if I'll go to the SPY here, S&P, whatever you want to look at, we're still kind of up there. I mean, you look at this bottom right chart on the SPY on the monthly. I mean, where are we? The all-time high made in 22. We just kissed over 450. I don't think people really get an idea how elevated we still are.
Yeah, September was, a challenging month. It was the worst month for the year for the S&P 500 and the NASDAQ. The S&P 500 dropped 4.9% for the month, 3.7% for the quarter. The NASDAQ dropping 5.8 decline, and then 4.1 decrease in the quarter. How do you guys expect October is going to go? Still similar chop, or what are you guys expecting here?
I think we're going to see chop. I'm very worried about the potential for these tape bombs, Tommy Lackey talks about. I'm very worried. We haven't had a serious earnings warning in a very long time. We've been in, a period where the stocks and the companies have been doing very, very well. The consumer has been strong. We've had some smaller earnings warnings like the airlines, obviously we talked about that. Nucor seems major to me because it's steel, but it's still not like a name that people talk about. It took, CNBC 3 hours to cover that. So I think like if we get an earnings warning, and I'm very worried that it's going to be Apple, in full disclosure, I am short Apple. I'm very worried that if it comes from a company like Apple or like a company from Microsoft, that there's just so much weight in there that there won't be the forgiveness on those ones. Because again, those companies are priced for perfection. I mean, how much of this, and I just think about Apple, like, is it a perfect storm? Like this phone issue that they're having, if just 10% of people say that we're going to buy the phone, say, I'm going to hold off because I don't know if they've solved this issue of the phones getting too hot. If just 10%, 1 in 10 people say, I'm maybe going to hold off because of that, they're going to have to guide down. I mean, maybe not immediately, but eventually. So I think like it just sets up like, wow, there's so much risk and so little potential return in some of these stocks. And I'm just like, it just sets up well for the bears.
Let's get to the spinoffs. It's Spinoff Monday, guys. And Kellogg's company has successfully completed their separation of its North American cereal business, creating 2 independent publicly traded companies. The separation will be achieved through the distribution of shares. Kellanova shares receiving 1 shares of WK Kellogg's common stock for every 4 shares of Kellanova's common stock held as of September 21st, 2023. Is this great for the stock?
Needs something. I mean, I don't know if it's obviously great for the stock, but stock is trading up 50 cents. So you adjust to close. We have to adjust for the spin-offs. It's $55.84. I don't know what this name either. Kellanova, Joel. I mean, I hate them when they change
the cereal
names.
From space.
Cereal from space cereal. So we're not supposed to call it Kellogg anymore. We're going to call it Kellanova. So when you go in, I hope they're not going to change the cereal boxes and start like putting Kellanova on it because people won't know what the hell they're buying. I don't. I'm looking at it today, and it's like I don't even think I have the right ticker on. I had to recheck it. I put the K, and it says Kellanova. I was like, what's going on? I'm like, this isn't right. Kellanova. I don't get it. I don't get why you want to change your name. Google, Alphabet. We on this pre-market prep show, we will call it Kellogg forever, like we still call Google. We don't call it Alphabet. We still call Facebook. I still call Meta Facebook. So I mean, Square Block. Who calls Square Block? And we see what happens when it's Square. When it's Square, they changed the name. That was the end of the company. I don't know. I hate name changes.
Well, these just financial engineering. I mean, like what does this do? For me, I'm looking at this Kellogg chart, and doesn't look like anyone wants to own either Kellogg or the other company. And
what's the other company's name? What's a ticker?
WK.
WK, and it's called Kellogg.
Is that what it is? Is that what the spinoff is? I haven't even looked at the news on it. So
I don't think it's trading just yet. So I can't pull
it up. No, it's not WK because that's Workiva. I don't know. It doesn't do anything to enhance shareholder value. You think it does, but I'm just looking at the Kellogg chart. I mean, there's other dynamics going into it, but what's it going to do? It just confuse. I mean, maybe Pfizer? Maybe they spin off AbbVie.
Maybe it's not trading publicly.
Yeah, KLG right now is what I have, and it's not open yet, so you can't.
KLG,
find it.
There you go. There it is.
That's
WK
the ticker.
Kellogg. KLG.
It's
called WK, but it's KLG. So we got.
Yeah, I'm sorry for that. It's called WK.
That's understandable mistake because it's called WK Kellogg.
Yeah, so I was thinking WK was the ticker there.
Yeah. No, that's
KLG,
fine. I was like, I know that's not it.
KLG. And there's a KLGG, so don't confuse that one.
Gosh. Okay,
so just to kind of give you guys, it's just one. You know what I mean?
Okay.
So just be careful out there, guys. And I don't know I don't think this really affects much, right? I mean, is that a company that unlocks a crazy amount of value here? It's just cereal, right? It's just a spinoff. So I don't think we're going to be watching this one too much. Danaher Corporation. Let's continue. Yeah. Announcing Saturday that it's completed its separation of environmental and applied solutions segments. It's completed separation of Veralto Corporation, Veralto, to begin trading on the New York Stock Exchange under the symbol VLTO on Monday, October 2nd. Today, let's see what happens with this one. Danaher, DHR.
So adjusts again. So you have to do the adjustments here, and people are getting paid for the adjustments because 248.10 and the adjusted close is actually $219.91. So it's actually trading up $2.50 here right now. So don't panic. It's not down $25. It's actually up $2.50 when you adjust it for the spinoff here. So DHR. Do we have a symbol on this one? Like it's so confusing here, Mitch.
Yeah, I agree. He just gave it, didn't he?
VLTO.
DLTO.
V as in Victor.
Oh, VLTO.
Yeah, got you there.
Veralto. Okay, Veralto. And this thing's trading wide, and I mean super wide. 81 to 85. 83.90 odd lot if you want it there, but I don't know. It gets confusing.
For the new companies, obviously the price action can't really interpret it, but I think what Dennis is giving you with those adjusted closing prices, if you own these companies, obviously you're getting some of the other company. I would just keep an eye on that adjusted closing price because to me, Danaher has had to solve. To me, that will give the cue of what the big boys that are in these stocks and the largest shareholders, making their decision based on that closing price from Friday. I hated this idea. I can still get out of my Danaher today, so I'd jot those numbers, and not just for today, but I think longer term to see what decision the street makes on these spinoffs.
Aramark today announced that it's completed its spinoff for Verestis, and which will hold Aramark's uniform and workplace supplies business. So Vestas is a now independent public company, and this is going to be trading under VSTS. Of course, Aramark will still be trading under the symbol ARMK, but we'll see what happens with this. Of course, this is their uniform and workplace supplies business.
It's Spinoff Monday, Mitch. You were
I know,
correct. Holy,
I
all
know.
these new stocks coming at us and
Spinoff
spinning
Monday,
off of companies
man.
that we follow well. Oh, confusing to say the least, and the adjustments and figuring it all out. But VSTS, so is $1930 is where it's like looking 2090. I know it just ticked there, but it's offered down. So don't get too
Spin-off
excited on that
October.
one. It was a 100 shares that somebody probably just messed up. So it's no bids. Best bids way down at 1691. Wow. Spinoffs, Joel. I don't even know what to say on all these.
I don't even know if any. I mean, the thing is are volume going to come into these stocks? I mean,
They will start a bit, but some of them don't have a lot of love, so it's
yeah,
hard to say. So
yeah.
ARMK, the adjusted close, if you want that one, the adjusted close on this one is 25.05. So I can give you the adjusted closes. 34.70 was the close. The adjusted close is 25.05. So the stock has ticked up at 26.72, but again, it's offered way down at 26.41. Best bid's way down at 25.24, and it's an odd lot. So it's not necessarily going to open up 6%. Holy
FedEx.
mackerel.
Let's get to ratings.
Man, I'm so
FedEx.
confused. This is like for a Monday, man. It's like,
Yeah, it's like it's got to give
spin-offs.
your head hurting.
I
after all
mean,
this.
yeah, one of the things is, let's just be honest. With spinoffs, we don't have that much information. Let's see a trade. Let's see how it trades after that.
Sure.
We have had some good success, though, with some spinoffs, right? Remember GE spinoff?
That was good, yeah. GE did well off it. GE did really well off it. GE Healthcare, GEHC has not done that well. It's Kramer's one of his favorite stocks. It's not a company that I follow. Probably should do some research here because there is some opportunities here in this market. As much as we want to be bearish, I still think there's some opportunities. I kind of like the bonds. We know that. I've already said that. Sticking with the bond trade, but I think there's some opportunities in beating down equities eventually here too. Some with the yield because I think we're at the top of that yield cycle. But let's move on to the FedEx.
We're moving on to FedEx, and just for the chat, I always catch what you guys are talking about. You guys are looking for Tesla's delivery numbers. I'm looking for them too. We'll see once they come out. We haven't seen them just yet show up on the tape.
9 o'clock, I bet you.
HSBC initiating coverage on FedEx with a buy rating, announcing a price target of 330. I wanted to bring this one up because it has had a recent gap up, has been holding in here, doing better than UPS. We've talked about that relationship and how it's separated. Is this the moment where we see it separate even further?
I mean, pairs trading, if you're on the right side, it's been good. You're on the wrong side, it's been real bad. Relationships are breaking down. Obviously, we've talked about the Walmart Target saga. The UPS FedEx is the same way. And I think a lot of it's to do with the 40% raise, too. Margins getting squeezed over there at UPS. We talked about the labor inflation.
100%.
The market is sneaky worried about it. I'm very worried about it. FedEx, though, resilient, holding on to the earnings gain here, Joel. Does not want to fill that gap, that 260 level.
I know.
Holy, there's buyers down there.
I know. Man, I'm like, HSBC, you're telling me to buy this now? Okay. It better bust over 270 and hold and get above 3 monthly highs. Be within a 50-cent area. So that's major resistance here. You can play it up to there. I mean, you even got to 70.46 on Friday before it retreated with the market. So prove to me you could get a strong 270 bid and get out of here and bust that out. But to me, that's just a major wall of resistance. And if the talk about the economy slowing down and all the stuff in the recession, people are just not going to be buying as much stuff in the stores, and they're not going to be buying as much stuff online. So you can't have your cake and eat it too here. So they've done a lot of cost reduction, but man, you don't see 3 monthly highs in the same area in a big stock like that very often. So FedEx holders, shareholders, make note.
Evercore ISI Group upgrading Rivian Automotive to outperform, announcing a $35 price target. Will Rivian continue to charge up here, or will it see the turnaround? This really hasn't been much movement on the monthly. The daily looks like it's been moving.
Yeah, something else
just come out in
something
Rivian?
broke. Yeah, something happened.
I think deliveries are coming in also for Rivian.
Rivian deliveries. So they get an upgrade. They upgraded this ahead of the delivery numbers. That took some guts. That took some guts, folks. 16,304 vehicles were delivered.
Yep.
in Q3, I believe it was 15,564. I'm looking at these numbers
Wow.
correctly here. So, oh no, produced 16,304, delivered 15,564. So they produced 16,304, delivered 15,564. I don't know where the expectations were. I don't follow Rivian really at all, so I'm not sure where they are. Obviously, the expectations aren't great because the stock's getting hit.
The important part is they did at least say they were on track with their previous guidance of 52,000 annual production.
I just go back to who's buying the cars if we go into a slowdown. Can these companies, make the
No
ends
one
meet
is.
here?
Let's be honest.
Well,
With these prices.
15,564 people did, so there's not nobody, but
I mean, but let's be. It's
That's not
a
a lot of
small. Yeah, that's not like Joel
Ah.
will say. I can make those cars in the garage, right? But
I want to see you make 15,000 Rivians in your garage. I know you're just being sarcastic, but
that's the truth,
again,
right?
It
We're
comes
running
back
into
to
the problem.
valuation, though, Mitch, and I'm with you. Let's go to our trusty Benzinga Pro, open up our details. Rivian even make money. I don't think it even makes money, so they get that ugly P symbol on there because it's not applicable when they don't make money. Yeah, they don't make money. Not even close.
The
So
truth is also we're coming to a point in time where the consumer is really going to have to start considering the expenses, right? Rent has increased and stayed sticky. The car prices have increased and stayed sticky. And if anything, all these EVs that are coming out is not going to help prices go down. It's just going to make the new norm of a brand new car $30,000-$40,000.
Yeah, you can't just on that. I mean, even if they double the amount, I mean, I've always had a hard time with these stocks and that, the production numbers and everything. I'll just look at this quick. Technically, you got that pop and now you got the drop. So if you once again selling the rip, selling in the strength, just for any reasons working out. I keep an eye on Friday's low at 23.39. We almost ticked there on that news. So if it holds in there, yeah, you maybe get a chance to, get back I mean, right now, I think you'd like to see unchanged. So good parameters. Yesterday's low, 23.39, Friday's low. And after being up and down, I'm sure a lot of people like to see that close at 24.28. This was riding a 1, 2, 3, 4, 5-day winning streak. So nice rebound off the 20 level. Let's see if it can hold Friday's low.
All right, Bitcoin is making a move today. Joel, you can show the futures. We can take a
Yep.
look at how this might affect some Bitcoin stocks. I did see some news out there for Coinbase that they were able to get some licensing, and that should help them get a continued lift. But we're seeing other kind of miners also trade up. There could be a lot of things that could be affecting Bitcoin right now. Of course, you guys weigh in the chat. What do you guys think here, Joel, on Bitcoin and maybe Bitcoin stocks?
I mean, this is just big. It just does what it does. It has a move, and then it sits there, and then it has like a big pop or a big decline. And you had the consolidation. I just going back on memory here, and not, I don't have any really true statistics to back this up. But a lot of times when you see Bitcoin up like 1,500, people get all excited. They try and pile into these stocks. Coinbase is 79, or Mara at 920, or wherever Riot is. So if Riot here up 69 cents, if these are your targets, then take the targets, because a lot of times, even if Bitcoin stays flat on the day, or stays up $1,500, just saying that, like, the Riot's already leaked a little bit here. So that's just kind of a broad observation here on Bitcoin and the Bitcoin stocks when you get a big pop like this.
It's just fade everything. I mean, we're still in this market where fading moves works. If you're chasing moves in 2023, you're losing money. There's not a lot of moves that are sustained. So again, we remain in a contrarian market. How do you make money in a contrarian market? You fade moves. Buying dip has worked very well in the first half. Selling rips working amazingly in the second half. But even buy the dip working still a little bit if you're selective and you're not too early on the dip buying. The bottom line is that if you're like, stocks gapping up 10%, and you're like, Kramer, oh, I love the quarter, we got to buy it up here, and then
I
it comes
can't
back
do
in.
it. Yeah.
I mean, it's not the Kramer market. Kramer is a momentum trader. So you got to figure out what type of market that you're in. That is what dictates your performance. Figure out the type of market you're in. I'll tell you what type of market you're in. You're in a contrarian market.
All right, that wraps up today's top stories, but we can do a little bit of ticker time. And I know that you wanted to mention, Dennis, on a trade idea that you mentioned just a couple of weeks ago. I think it might have been even a month ago on Johnson and Johnson. How has that gone?
Ooh.
Yeah, I mean, we got this one absolutely right. And if you can go back to the shows from a couple months ago, I was saying it just sets up. Wasn't cheap. They obviously, got the lawsuit issues, which we know is not going away. Those problems are not going away. And then, it was like, wow, if you're going to continue to get yields elsewhere, why do I want to chase in Johnson and Johnson for a 2.5% dividend? Well, that dividend is now up to 3.06%. Stock has fallen 20 points since we were, not liking it back in August. I think like it's come down a lot here now, but I just can't, with this talc issue here, we don't know the unknowns here. They were trying to get past it and they can't seem to get past it. Just like it seems like 3M can't get past their lawsuits either. They get a little pop where it looks like they're going to get past it and then the stocks just go down again here too. So Johnson remains a no touch for me. I think you got to sell rallies.
Oh, wow. I got Triple M. I had not looked at that lately. Look at that.
That popped up on that they thought they were figuring that, earplugs or whatever it was. They were going to get to pass this lawsuit. And then all of a sudden, they're not passed. Seems like they're never past these lawsuits. They go on and they drag on, And 3M has dragged on to a point where it's got a 6.4% dividend.
Wow.
I mean, it's dragged down to us. If they can ever really, truly get past this stuff, this stock is cheap. But I don't know how to quantify. And there's other lawsuits in there too. It's not just the year. There's another one too, isn't there? Like there's multiples in here. So, I mean, it's the issue. I mean, this stock was $250 a share back in 2018. It's now 93. You're going back, Joel, go back on your charts here because I can't even go back far enough. You go back to like 2014 pricing here. Get back 10 years of gains here on 3M. This is a company. This isn't like, some small little zombie Kathy Wood company here. This is a company that makes money. They make like everything. I mean, diversified, they make all kinds of stuff, 3M. Yet here's a company that's on a 10-year low. You go back 2008 was different because they really punished stocks back then. But I mean, we're getting back 10 years of gains here. Would I love to buy 3M at a certain point in time? Yes, but we got to get by these lawsuits because I can't quantify all that. And the market can't either. And that's why they just give it no love. And J&J, look out, J&J shareholders, because you could be the next 3M.
Yeah, boy, the price action here, horrible. Like I said, I had not, and I think it caught an upgrade here too, in this area too. I mean, oh yeah, everything's okay. So, someone puts a 115 price target on it. I don't know what happened. Was this a bad market day, Mitch? Man, oh man, it went, what was the big bar here? Well, no, I guess it was just because it had a big range that day. Oh, the 13th went closed at 107.16, had a $7 range, closed at 101.06. Hard to recover from days like that. I'll try and be a little optimistic for our Triple M shareholders. And on your monthlies here, you are on the low of the move or near the low of the move. So if you want to lean on that, you can. A couple monthly lows right at the 92.38 area. 92.41 was your low on Thursday. If you're a day trader and you don't care about the long-term prospects of this, of course you could look at it as a potential long. But a lot of times, man, you get good moves when they take out those major levels. So look both ways in 3M, trading down 9 cents today.
That down action on Triple M, just to give a little bit more detail there, that was at a investor presentation where they said that slow growth environment in 2024.
So they don't like that either. And then you still they settled with the U.S. military, but they haven't settled out with so many other organizations and people.
A lot of issues.
Lots of lawsuits still pending here. So $6 billion to the U.S. military, and that doesn't end it. That just ends it for the U.S. military. It doesn't end it for everyone here. So, man, when you make a product that fails, you can really see the punishment you get for that.
Let's go to the stock that tried to turn last week. I'm wondering if it can actually hold its little gains from last week. That's, of course, ARM mentioned here, and been focusing on this stock as it seems like the days that we do have up action in tech, a lot of that also coming off of ARM, I think, as traders are watching this side by side with NVIDIA also. Now it's setting up here for kind of a little bit of a bear flag. Will it knock down back to 50?
Again, it's hard to call these technically because there's just not a lot of data. I don't typically trade them. If I do, it's a small short term like day trade. But I do think eventually it breaks down. But we've seen irrational exuberance. I mean, the valuation makes no sense at 50, 60, and it's belled out up here for like 10, 12 days. So valuation doesn't matter until it does. I think eventually it does, but that doesn't mean it can't go up. Can't in the short term. It's just too hard for me to make a call and trade something like this.
Well, just from a long term. What do you have? 2 weeks price action. You got to keep an eye on this 56.79 level. You hit that on Friday. Then you got two other tops in that area. So man, that to me, after like the big ramp up, then a decline, you're like, okay, you could get halfway back. Not even coming near. I think halfway back is right around 58 or 59. It's not getting there. That's major resistance right now. So if I was looking at this, the recent move, 50 to 57, 3.5, 53. If you feel like you need to own this thing and this is going to be a super, long time low, then you're getting half of this move back at 53.50. But maybe a better area if you got a short off on Thursday and Friday, as opposed to trying a long here in ARM.
All right, so this is just what I was pointing towards, that kind of bear flag action, and that's
Let's
just
see.
what I see.
Mhm.
All right, so I put that right there for you guys. You guys see the bounces off that level. It could maybe go. I think it could even maybe make an attempt one more time towards this top of this trend and then come down. So it's not guaranteed that it breaks right now today. So be careful out there, guys. I'm just going to keep an eye on it. And really, if it goes through 50, we all could kind of say that this could just drop a little lower, and then that could drag tech. So that's kind of the level. Of course, 50 is all the way down here at the
You think this
Yeah,
is like? You
50
think
would be a
this is a?
disaster. If it loses 50, it's going to see 45 in a heartbeat. So that's the
you
way to
guys.
trade it, maybe, is you wait for the actual breakdown. Because I think as much as failed breakouts have been happening, the breakdowns have been working. So, I mean, that's
Yeah.
something to think about. When the stocks break down, it's probably a better play in shorting them through the breakdowns as opposed to buying the breakouts. But man, I don't know. We're getting hit here again here on the markets. We were doing okay, and then we're starting to get whacked again. I mean, NVIDIA has been very resilient. There is a headline here today. I guess Goldman's going 600 PT on it. So I hadn't checked that, but chat just said it. I can verify that right now. I mean, it's had a nice little rally back here in NVIDIA. So just trying to see if I can find that Goldman note here from the weekend.
While you're looking for that, I got a good number for you NVIDIA traders. You did trade over 442 in the pre-market, getting to 442.50. And then boom, you look at this area here. You had a high right at that on September 18th. So now that's $3 away. Very important level. And then I think even if you could get through that, you still that site. Remember how long 450 held up? I'm not loving this call by Goldman here. I just,
It's
man,
chasing a bit.
yeah, and also like this, that's a big red candle, Goldman. Look at your charts. Look what it had when it had a big red candle here. It had another big red candle. So, I'd be fading this one. I'd be fading this Goldman call.
450 major resistance. If it gets into silly town, I think you find sellers all over the place. So I do have it. NVIDIA's upgraded to conviction buy from buy. So they had a buy on it, and they went to conviction buy now. So I guess that's an upgrade. I don't know. Buy is a buy, it sounds like to me, so it doesn't sound like an upgrade. But they're saying it's an upgrade because it's conviction buy now. Price target's up to $605. So going up to 605. That is the reason that NVIDIA is ripping here this morning. Obviously ignoring the overall market action because Goldman, whether you like them or not, they carry weight.
Let's go to Nader in the chat. I haven't seen Nader in the chat. And if you're not new, well, it's good to see you in the chat, right? Let's go to Boeing here. BA.
Ooh.
This has been a stock that has just gotten whacked and whacked and whacked. Is it oversold yet? Hell yeah, it is.
Hell yeah.
But that doesn't matter right now because the truth is, look at the XLI also.
Yeah,
and you guys, this will tell you guys what really has happened here is more along in industry wide, sector wide, where it's just getting whacked in industrials. And then on Friday, I started seeing even Caterpillar start giving up its gains. It just made a recent move that made it look a little bullish and now is coming back to 273. I'm kind of worried about industrials.
This Boeing is so smooth. I mean, look at that. It doesn't even look real, that top right chart. Just the slow, like steady collapse, just death by 1,000 cuts. quietly going
know.
from 230 to 190. There's a 20% death by 1,000 cuts fall. Your stock falls 20%. Everybody's like, oh my gosh. It falls like though for a month straight, just losing $1 a day, and nobody notices at all.
Destruction.
This is this market. There has been so many little pockets of destruction like this where you're like, when did that stock get down to here? And it's just death by 1,000 cuts. It hasn't been a market that's been crushed. It's just been a market that would just bleed you out a little bit. Slowly bleed you, slowly bleed, slowly bleed. And that's what this market has been, and for so many stocks. Now, again, stocks like NVIDIA have held up well because they still have that AI story attached to them. But there's no AI story to be found in Boeing here, not, that the investors are buying anyways. And I mean, airlines are struggling. So it's not, there is definitely a positive correlation between Boeing and the airlines. LUV making a new 52-week low, it seems like every single day. I have the AAL, which was a disaster buy. I bought it at 15. It's 12. Delta, again, the CEO on CNBC there, 2 months ago saying it can't get better. When the CEO says it can't get any better, sell the stock, because that means that it can only get worse. And that's what's happened with Delta. It got worse. But the Boeing, is this an opportunity, or some of these stocks opportunities to buy?
Oh, man.
Well, if we don't go into a recession, yes. If we do go into a heavy recession, that could get worse.
Oh, man. I was arguing that, we need smaller planes. And then the stock just kept rallying in my face, rallying up to 240. This is a disaster. I'll say if you want, if you want something to lean on, this 190 to 192 area has held up the whole year. 190.03 was your low on Friday. It's almost a double bottom there. So once again, look both ways. If you're buying this off the 190 level and it takes it out, well, short it going through it, and you got a mental stop if it comes back above it. But that's just that chart just looks absolutely horrible. And
Good,
the other thing too, I just wanted to if you are buying this thing on dips, you got a lot of competition if and when this thing ever rallies, because there are so many people. That just looks like an institutional seller, just one after another, just saying, you know what, we're getting out of this. I don't care. Don't work it. Don't work it for 2 weeks. Just get me out. Get me out by Wednesday. And they're just massacring it.
Do they expect maybe the consumer slowdown to lead to maybe non-deliveries of planes and things like that? That's what I'm thinking about.
Well,
things
that's
like
where
that.
it comes to, Mitch.
You know what I mean?
It comes to that. If the airlines are struggling, they're not going to just be putting huge orders in to get new planes. I mean, and again, we are seeing a slowdown here. Not necessarily in travel. They're seeing margins get squeezed a little bit. But even if demand stays high and margins start getting squeezed, it means they have less money to upgrade equipment. So there's thought process there too. Margins are getting squeezed, and it's not just in the automotive industry. It's not just at UPS. It's not just, at UAL with the pilots. It's everywhere. Everybody wants to be paid more money, and that will turn around and keep inflation sticky.
Well, let's wrap up this market like always. Dennis, what's your final outlook? Then we'll go to Joel, of course, for the ES chart, and then we'll wrap it up here on Premarket Prep.
Choppy.
What do you got for us?
I think we still are going to see some chop. We need direction. We haven't got the Tesla deliveries here yet. Maybe that bails this market out today. Maybe it doesn't. We don't know yet. I still think we're selling rips. I still think there's a lot of risk in this market. I still think you've got to be very careful with just blindly buying the dip, because we're just not in Kansas anymore. I mean, we're not in 2020 anymore. Tesla's starting to get hit here right now as we approach 9 o'clock. I don't see the numbers here yet, but we just dropped $1 on Tesla. Makes me think that maybe those delivery numbers just came out.
The Bulls got their work to do, and they got a couple opportunities to do it. Right now, they've made a halfway decent defense of Friday's low, but you could just look at your daily lows. Friday's low 43.11, Thursday's low is about 10 handles below that, but you got to look at that low from Wednesday, last week's low. Look at last week's low in all your stocks, and man, if that gets punched, then I think it's going to be another rough week on Wall Street. Tesla getting absolutely destroyed here. Those deliveries must have fallen off a cliff. But good show today. I guess we weren't quite that optimistic, but we can only give you the information the market provides for us, and going to be a rough start to October.
All right, Tesla's numbers did drop there. I'll tell you what, come over to live trading and I'll talk all about them. That's coming up next. We'll get you guys
Teaser.
over
I like
there.
that.
Hey, you know how we do it. You know how we do it. Even Dennis is like, ooh, I want to know.
I want to
right,
go.
guys.
I'm going over to live chain because I need to know these Tesla numbers there.
You guys keep up with, of course, Triple D Trader. And of course, you guys know Joel. He has the closing print at 3:30. You guys keep up with him. And if you guys want to see more, you could check out more on Premarket Prep Plus. Of course, you guys got the website. If you haven't been on premarketprep.com, I mean, what are you guys waiting for? Definitely check it out, guys. And it's always good to have you, Dennis. Appreciate you coming in this morning.
I do have the
killing it like
Tesla numbers, so
always.
we're going to keep teasing them. We'll give them to you over on live trade and get over there because I'm looking at them. They ain't great.
Ooh. All right, guys, find out. Stick with us. We're coming up next. Don't go anywhere. Of course, live trading starting up.